Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Friday, February 26th. The big thing today is the meeting of the G20 finance ministers and central bankers in Shanghai, which will go on to tomorrow as well. They are expected to discuss such topics as the recent market turmoil and the global economic slowdown. FX is likely to be high on the list as everyone tries to get some idea about whether their hosts are planning to devalue their currency. At their last meeting in September, the G20 reaffirmed their, quote, commitment to move toward more market-determined exchange rate systems, unquote, and to, quote, refrain from competitive devaluations, unquote. I expect them to reaffirm this statement, which would tend to be positive for the dollar, as it would mean less pressure on the U.S. to weaken its currency. Meanwhile, the International Monetary Fund has urged, quote, bold multilateral action to boost growth and contain risk, unquote, such as the coordinated stimulus that followed the April 2009 G20 meeting. But I don't see any appetite for anything like that now. Any such actions would have to be fiscal, and right now none of the major countries are in a mood to increase spending. So basically, I expect fine words but no commitment on growth. At 1300 GMT, we get the German CPI for February. Oil prices have been pretty steady in February, so the month-on-month rate of change could be fairly normal. But of course, oil prices are still down a lot from a year earlier, so the year-on-year rate of change is likely to fall further. In fact, it's expected to be zero using the EU's harmonized way of calculating it. The number will be closely watched to get a hint of what the ECB will be up against at its next meeting. Now, a fall in the year-on-year rate of change suggests that it's likely to be negative for the euro. Shortly afterwards, we get the second estimate of U.S. fourth quarter GDP. The market expects U.S. GDP to be revised down. That's already in the market, though, while forecasts for Q1 are much more optimistic. So I don't expect much of an impact as long as the number is near the market forecast. Finally, at 1500 GMT, we get U.S. personal income and expenditure for January. It's expected to show both higher incomes and higher spending. That would suggest a healthy end in economy and could be positive for the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.